Okay, I think we're pretty much there. Everyone's in. So firstly, thanks for dialing in. It's great to have such a positive reception on our first Minds Money 5 at 5. We're really excited to be kickstarting this venture. A venture we'll be running around the world in the next couple of weeks. So our plan is to be in Australia next week, and then for the upcoming weeks to be in Toronto and London and those time zones. I guess a good place to start would be what is this and why are we doing it? The format of the event is going to be very much based on being interactive. So we're not expecting it to be long presentations, for example. We're expecting 3 to 5 minute presentations, short and hopefully quite sweet. There'll be plenty of opportunity to question and have interaction as well. So more like a radio show, if you like. Why are we doing it is fairly obvious. I mean, we're a business that runs events around the world that connect the mining and investment community. That's at the moment is, alongside a lot of things, is facing unparalleled challenges in the industry, and individually and for families and businesses, it's tough. So we're hoping this will be a bridge to connect the industry, the mining industry and the investment community. And I think as a business, we're also used to doing it face to face. I mean, we're used to sitting next to each other and chatting across from each other. A lot of the industry is based upon trust of senior management teams. So hopefully this will be a bridge to sort of putting those two communities together. I've got some notes which Lucy's prepared for me, our digital marketing, which is important in capital letters. So I'm going to go through those to keep her happy. The first one, we want to see you. So I think we've already got that one covered. So I don't need to spend a lot of time with that. But it's really important we see people. I think looking around, I was going to say about dress attire, making sure people are dressed appropriately or, dressed. But I think we're okay on that. Maybe other than some of our panelists are the only ones I'm slightly concerned about. If you notice you're on mute, when you want to ask a question, there's a raise your hand function. So if you go down to manage participants, go into that section which says participants, put your hand up, and then if our host misses it, almost like the cat out of the bag there, if our host misses it, then I'll jump in and we can just put you onto it. So you'll be unmuted, you can ask a question and a follow-up question. The other functionality around communicating with people is the chat room. So you'll see it again on that bottom file. And that's an ability to follow a conversation. If it's something you're particularly keen on, interact. My guidance or my suggestion is that we try to do the hand raising rather than the chat room because it's supposed to be interactive. We will be recording this session, so I guess not too many rogue questions, hopefully a few to keep people on their toes. And we will be providing a link afterwards as well, so you'll be able to look at all the footage, and we'll be sharing it with our networks around the world, and we'd love you to do the same thing. On a purely IT basis, if anything goes wrong, it's a bit 1980s, but we're just going to ask you to turn it off and turn it back on. So literally log out of Zoom, log back in, very simple. Throughout this session, we will, as I said, be interacting. We'll keep you on mute, but if you want to get involved, we will do. That's it for housekeeping. So I'm going to hand you over now to our host, who, firstly, I'd like to say a big thank you. He's helped create some of this content and this format. Somebody who's a well-known industry figure, well-respected. He didn't tell me this, apparently this is what I've been told. Well-respected, fun, somebody who's going to bring some life and verve to this session. So without further ado, I'll introduce Hedley Widdup, Executive Director of Lions Selection Group. Hedley, over to you.
We're in a world where we have conferences, we can't have people standing up on the stage. And here we are, dialing in. I can see from the screen 115 people in the meeting already. The webinar's 20, and presenting to conferences 110 is already a really good number. So this is wonderful, and I think it's great for getting people together. Scanning down the list of registrations, we've got people from as far afield as places like Switzerland. I saw one from Morocco, someone dialing in from China, Turkey, Argentina looks to be represented, Canada, the United States, and even someone from Queensland. So welcome all of you to this discussion, one of the first of its kind, and it's a great pleasure to be part of that as we go forwards and experiment. We're going to start by running a bit of interactivity, and the whole purpose of having this Minds and Money 5 at 5, 5 speakers, 5 o'clock, and we can have a drink while we do it. It's definitely happy hour here in Melbourne. So Lucy, can you please run the first poll? And the poll which I'm asking for an opinion of is just what is the most appropriate drink that a host should have when they're having one of these global interactive webinars? One of the things I've been quite nervous about in the lead in here has been, what should I have? Is it a beer? Does that make me look like too much of a blokey bloke? Or should I wear a white shirt and drink red wine? I mean, it's Thursday, for Christ's sake, and I'm in my study. Should I drink Negroni? And you'd all think I'm a tosser. So you tell me what you think I should be drinking, and then I'll reveal what I've been drinking when we get to the results of that. So if you'd launch that, Lucy, that would be good. You know how to ask a question. I'd very much welcome if you would ask questions as we go. Okay, so we're getting some great responses on the drink of choice in progress. I thought I'd open the discussion just by saying, look, we've got a really fascinating market that we're in at the moment. We've got some comments coming from a guy who is, I won't use the word expert because you've got to use that very cautiously, but Mark Goulopoulos has always stunned me with some really wonderful and astute observations of the global equities market whenever we talk. So I'm going to talk more about gold because I think that is something which is common to all of the speakers here, but also presents as something which is quite likely to perform quite well in the aftermarket to this COVID-19. Mid-2019, we were starting to see great fundamentals for gold creep in as we were seeing QE come back into the discussion for major economies. Rates had hit a new bottom, and here we are with COVID-19 and stimulus coming out. So I think the outlook for rates being low for longer is wonderful for gold. There's been a lot of pre-questions come through which have asked, what do we think the outlook is for commodities other than gold going into the post-COVID-19 world? It seems like a pretty difficult one to answer on the basis that there's a lot we don't know about what the world's going to look like, how long this is going to last, and what sort of stimulus measures will come out. But I think the most appropriate, obvious answer there is that there's quite a bit of stimulus coming into the market and speculation about how large that would be. And some thought that this will find its way into fiscal measures which promote building activity and consumption. And I think along those lines, you've got to think that if gold benefits from the lack of interest rates at that time, things like iron ore and copper are likely to be beneficiaries. And I suppose if you overlay the outlook for energy, we've seen a collapse in oil price as an overlapping battle for position in the oil market has come through between Russia and Saudi Arabia, which I suspect probably kicks the can a fair way down the road for renewables and may affect the demand for things like battery technologies and things like that. So, you know, there's several thoughts that could come through here. Some of our speakers might have some other ideas along the way as well. Couple of ground rules. First one is that some of the behaviour we've seen from a couple of participants there, and I apologise to everyone for them. There won't be any more of that. But a couple of other rules. COVID-19 is prevalent, no touching. We used to have a rule like that on geology field trips back in the old days, although there was a follow-up to the no touching, which there's no need for us to go into now. Wash your hands after you finish and have a drink. I think it's probably as good a time as any for me to close off the poll, Lucy. So I think I can do that. I might do stop share results and see what that does. So where we are, 49% of you think I should be drinking a beer. 36% I should be drinking wine. 9% think I could be pretentious with a Negroni. And 5 of you, 7%, say I should be drinking rum. And very happy to say, cheers to all of you. I'm going to tell it like it is. This is rum from the heartland. And to go along with that, in good newsreader style, I've got a beautiful shirt on, but I'm showing the colours of the North Queensland Cowboys. That's what newsreaders can do under the desk. Now, that's quite enough from me. Raise your hands if you've got questions along the way, but I'd like to introduce you all to a speaker from Melbourne named Mark Goulopoulos. I've known Mark now for a number of years, and as I said in my lead-in, when we get together and talk about the market, his observations of equity markets have always been remarkably astute. Mark, I doubt you're going to sort of give us too much in the way of a prediction, because that's dangerous in this sort of a market, but perhaps you can just give us a précis of how you see the world and the markets at the moment. And I'm sure there's some hints of where it could go from there without making predictions. It might be directions rather than quantities, if you like. So, Mark, dying to hear from you.
Thanks, Hedley. Really appreciate you saying all those very nice things about me. To sum this up in 5 minutes is going to be pretty difficult. The most interesting market we've had in a really long time, basically since the GFC. But I did put together a couple of slides which I thought I'd talk to. Some of the guys that I follow closely and have done for a long time summed it up really well when they say that the fundamentals go out the window at a time like this, and you end up really relying on technicals. So you're looking at charts more than anything else. You're looking at flows of money. The market's reacting to all sorts of things. Obviously, case infection rates and flows of cash into bonds and other commodities. But I thought I'd put together these couple of slides on where the market is on the left-hand side in Australia, where we've come from, and it's a very long-term chart. And then I've put a bit of an analogue to what happened during the GFC about halfway through in the US, because I think it does have some comparative points to what we have here in Australia. So looking at the 20-year chart in Australia, the ASX 200 had quite a sizable fall, obviously, a very, very quick fall. This has been the fastest correction or bear market we've seen in history. It's happened more quickly than during the GFC. And as far as a fall from the all-time high goes, it actually exceeds the 1987 crash. So the horizontal lines that I've drawn on there are the lines of support that I believe that the market was going to enter into. And if you see the very second last of the vertical lines, you can see there that in the space of one single month, we broke through two lines of support and got down to the third one, which I think is probably going to be one of the biggest support lines. So in essence, what that's basically showing is the market fell very, very quickly straight through two very key support levels and down to around a 4,500 level. So since then, I think what we're going through is essentially a definition of a bear market rally. They happen during all bear markets. They tend to be very, very strong in terms of the magnitude of the move back up. And so far, we've recovered about 31% of the original fall. At the bottom, which was only Monday before last, we were down as much as 38%. And we've since recovered 31% of that fall. On the right-hand side, you can see what happened during the GFC after the Lehman collapse. The market lost 35% over 21 days. It bounced 50%, or it recovered 50% of that fall within 3 days. And then it ultimately took 6 months until we got to the ultimate low, which was about 48% from the peak. Now, all of these numbers are just numbers. Anything could happen. So from here, but the point being that I think for us to find an ultimate low in the market is probably going to take some time. No one has seen a market like this in history, or an event like this in history, I should say. And so I think what we'll find is a market that probably recorrects over the coming weeks. But ultimately, we may not see a permanent low, let's call it, for some time. Now, I'll just move to a second slide. It's a bit text heavy, so apologies for that. But the bottom line is what I wanted to point out here is the short-term, medium-term and long-term outlook, and a bull case and a bear case for where we might actually end up. But the bottom line is that it's anyone's guess where we sort of head from here. But the bull case would say that as far as coronavirus goes, perhaps we do flatten the curve relatively quickly. And if we can, then the economy experiences what will be a sharp recession, but should be a relatively short recession. Bond yields in that environment would remain quite low. The central banks, which are currently undertaking enormous amounts of QE, would still maintain that QE. It would mean for equities, although we may have a short-term retest of recent lows, we would probably continue to have a decent rally. And the outlook, I've specifically put an outlook here for gold as distinct from any of the other commodities, because it's I'll come to why in a minute, but in that environment, you end up with a neutral sort of a gold price. You'll have negative real yields, you'll have QE, which is positive for gold, but you'll also have a reduction in uncertainty because you will have COVID starting to find a way forward. So the market will get a bit more comfortable and you'll have a reduction in uncertainty. So in that bull case, over the medium term, you'll have other things like chloroquine might work for COVID. You'll be getting an economic recovery. It will be U-shaped even in a bull case, but not, a very sharp U, let's call it. But from that point on in the medium term, you start looking at an upward bias to bond yields in terms of inflation expectations picking up, things starting to look a little bit more optimistic. At this point, central banks will still have the remnants of what they've had to do during this period. So you'll have them continuing with QE, but using that QE to manage the yield curve. It seems to be a dirty word. They don't want to call it that, but that's what they'll be doing. Essentially keeping short-term rates nice and low, trying to steepen the curve and trying to encourage this ongoing economic recovery. For equities, what that would probably mean is a very, very large rally. You would, I suspect, probably see all-time highs in the market in a relatively short order. And for gold, it would be very strong. Negative real yields and continued QE. And I think that you'd start to really see gold making some strong moves upwards. In the longer term, obviously, I would imagine we'll have a vaccine for COVID over the next 12 to 18 months, we would hope. The economy would probably be in some kind of a boom due to the fiscal and monetary stimulus, which basically both come in with a lag. So with that lag, you get a very, very strong economy at the back end. Bond yields at that point would be getting very strong upward pressure. And the central banks, as much as the economy would look a lot better, the central banks would be forced even more into QE because they would need ongoing low government bond yields in order to deal with the very large debt levels that exist from the fiscal and monetary stimulus that they've undertaken both now and what they will do in the next few months. In that scenario, longer term, equities end up in some sort of a bubble, and gold, I think, would be extremely strong. You'd be looking at monetary debasement type situations, and I think that all of the old gold bulls, or gold bugs as they're called sometimes, would be having a very good time of things. So you can offset that to a bear case. A bear case would obviously mean that the containment strategies in the short term don't work. Our economy goes into a deeper recession. It lasts longer. The negative bond yields persist globally. As they've termed it, QE infinity pretty much would be a big factor. Equities, unfortunately, would extend to new lows. We would recorrect lower. And gold in that environment in the short term would be strong. We'd have a large degree of uncertainty about the future. We'd have QE and we'd have negative yields. So gold would be strong. Over the medium term, the same thing applies basically. You'd have very low bond yields. You'd have deflation concerns. QE would continue in that situation as the central banks are trying to stimulate the economy. In that scenario, equities become very, very volatile. You'd probably have a grinding bear market, but with some very, very significant bear market rallies as sentiment has wild swings during that period. And again, gold in that environment would be strong. Negative real yields, continued QE. Longer term, in the bear case, the vaccine might take a lot longer to develop than we're hoping, hopefully not. The economy would be a very slow recovery. You'd have a very high debt burden, which would limit things. Bond yields, the term Japanification of the world would probably exist. So bond yields will be low or negative globally. And central banks will be forced to be printing more than they ever have. So in terms of equities, eventually they would probably recover just purely due to a weight of money argument from central banks. And gold would be very strong in that environment. So I'm hearing a lot of commonality of gold being strong in those environments, which is music to my ears, but clearly a fair bit of uncertainty as to the interplay between stimulus, equity prices, and the way that economies recover to this. So, I mean, we're about 20 days into this event in a market sense. Would you say it's far too early to really understand which of those scenarios is likely to be played out? Absolutely. There's a very big range between the bear case and the bull case, and there is a whole lot of other interplay that we don't have time to sort of go into at the moment, but there's a big interplay between US dollar shortages that exist globally. And that's another factor that central banks are grappling with. Because of that, that's also helping them, or encouraging QE or forcing QE, I would say, which is, again, bullish for gold. So didn't necessarily come here to be bullish gold only, but I'll just put my last slide up, which basically says that it's very difficult to see other than a positive outlook for gold, generally speaking. And, you know, if I was to put my own view on it, I suspect that containment strategies probably will work. And I think that there are a lot of other alternatives, strategies, I should say, that governments globally will start to undertake, improved testing and tracing of cases and things like that. And I think the reality is the world as it is today can't stay in lockdown indefinitely. So if I was to pick a bull or a bear case, I'd probably be leaning more towards the bull case, but I am a born optimist, so that could be why too.
Mark, that was an amazing rundown, and it's always difficult when one of your tools is taken away from you. We've had a couple of tools on the call, and you've rolled with that magnificently. So thank you for the summary. Look, I had a couple of questions, but I think we might move some of those to the end, because some of what I wanted to ask you might come through from some of the other speakers as we go as well. And you've actually covered quite a few of the things that I was going to touch on there. So, but you, like me, are an investor, and I think we've got a lot of other great investors on this call with us. We've got three really interesting stories to listen to, and given that you're optimistic on gold, as am I, these are all gold stories, so we're well prepped for that. So two of them have been handpicked by Lion. The third one has been handpicked by Minds and Money. They're all got a great story to tell. So I think we might move the agenda along a bit and hear from some of these. The first, in terms of cabs off the rank, if you like, is one of my colleagues from Lion Selection Group, and he's going to talk about one of the things that Lion does, one of our main projects. This is my colleague, Craig Smyth. He's the CEO of Lion. Now, we have an investment team of 4 people. Craig and I actually think that the reason that we get chosen to stand up in front of people and talk is because we're the 2 better looking ones. You guys can be the judge of that as we go. Lion's an investment company. We're listed on ASX, and we basically offer a managed exposure to the junior mining space. And at the moment, the biggest part of our portfolio is a very exciting discovery taking place, or that has taken place and is continuing to take place in Indonesia. So, look, Craig Smyth, over to you. I think you're going to have to manage, Craig, I'm afraid, without slides, but I know that you know this story very well, and I don't think slides are going to be too much of a problem for you there.
Thanks, Hedley. But by way of background, I mean, Lion has a track record spanning almost 23 years now, and perhaps importantly for investment cycles. And today we find ourselves in a particularly strong position, which we're pretty happy with in these uncertain times. Throughout last year, towards the end of last year, we made a series of strategic exits, and what that leaves us with is a position that we have $15 million of cash and a portfolio of pretty advanced projects that really are leveraged to this buoyant gold market that we're beginning to see. Specifically, we've got 2 multi-million ounce projects that we're talking about today. Greg will talk about Nusantara, but I wanted to talk to you about Pani. So we've been involved with Pani for approaching 10 years, in fact. When we first got involved, there was a resource that had been drilled out by BHP of circa 500,000 ounces. We're always very interested in it, but it wasn't the principal reason for our involvement with the company at the time. But over those years, there's been a lot of work done both on our side of the tenement bent boundary and done by our neighbour. The 2 tenements were split in 1994, and pretty much since that time, people have been trying to pull those 2 projects back together. Late last year, we announced a conditional deal where those deals would be effectively rejoined. And what that does is it enjoins our project, which is circa 2.4 million ounces, with our neighbour's tenement, which is circa 2.3 million ounces. And perhaps importantly, there's the gap in between that is being drilled as we speak. We're pretty excited by the project. Our feeling internally is, time will tell, but it's one of the best projects that Lion's been involved with. And what we like about it is obviously it is large. It looks to us to be a world-class deposit. It's large scale, open pit, bulk tonnage, and the metallurgical recoveries and everything that we've seen to date, which is still relatively early stage, is good, and coupled with good grid power and good infrastructure. With the project, the gap in between those two resources that I talked about, as I said, we're drilling at the moment. We're looking forward to getting some of those assays in due course. In this environment, it's probably not the easiest thing to achieve, with limits on people travelling and bringing it all together. But we look forward to those results. The second aspect, I guess, is that the deal does need to be completed. So we very much look forward to that, and so we'll watch the space in terms of that deal being completed and really getting going on the project. What the deal will mean is that Lion ends up with 20% in this, what we think is a world-class project, along with our partner Medeka Copper and Gold, who end up with 40%, and J Resources, who end up with 40%.
Craigos, this is a very unusual structure. You don't often see three-way joint ventures. We've got 20% of it. There's two others with 40%. Generally, when something gets to the point where it needs to be developed, and this one looks like it's moving quickly, someone wants to own more of it. I mean, do you have any Dorothy Dixer lead-ons there as to what your thoughts might be as how that might play out? I mean, this is the kind of project that if it was in Western Australia, it would have been bid for by Northern Star or Evolution, or probably fought over by them. So surely there's some equivalent tension that could take place in Indonesia.
Yeah, look, certainly there's going to be some interesting dynamics. Medeka Copper and Gold, as people may be aware, are the operator of the Tuja Bukit heap leach project. They've done a great job there of developing that. They've got a market capitalization. They're listed in Indonesia, and they've got a market capitalization of about $2 billion US. Logically, you'd think that one party, controlling the operation would be the way forward. But we'll just have to watch this space. The other party involved, J Resources, they've established two pretty good heap leach projects in Indonesia. What happens in the future, we'll just have to wait and see. But it will be interesting to watch.
Tell you what, I'll settle for it. Looks like a valuable project, very interesting, and you don't see many 5 million, possibly moving to 6, 7, or 8 or more million ounces of gold in one place in this market. So we can actually. I'm not sure where you're sitting relative to me, but if I put my hand up like that, can you high five me? Let's keep going, because we're with some of the disruptions earlier. I think we're going to push over time. So, Craig, I've got a couple of questions which might be appropriate for you, but we'll slip them into the 10 minutes at the end that we've got for general questioning there.
Sure.
And we're going to stay within Indonesia. Greg, you're next cab off the rank, and I get lots of questions all of the time when you get around conferences. So this forum would be no different if we were face to face. And a lot of people ask, what do you like? Now, I've said that I'm optimistic about gold. Mark Goulopoulos has said the same thing. With that positive view, producers will surely benefit. And it's a great thing to be exploring for. But I see the challenge, though, over the next 6 months with this unique disruption of COVID-19, producers might have to stand down people and pause operations, or, dip their supply a bit. Explorers still have the exploration risk going on, and in the end, it might be difficult for them if they can't get to where they're exploring because of that disruption. Developers, on the other hand, have ounces in the ground. That's defined. They don't have a great deal of people that are having to meet every day face to face like a production workforce. So Nusantara sort of sits within this amazing spot where it's come from having I think the BFS was about $350 an ounce ago, and here you are sitting not having to worry about laying off a production team, but you could experience this amazing leverage. So I'm looking forward. You've got a heap of ounces in the ground. Can you tell us a little bit about what's going on there for Nusantara?
Thanks for the introduction, Hedley. So look, let me just give you the brief overview of Nusantara. You're talking about the next cab off the rank, speaking about Nusantara, but I think importantly, we're the next cab off the rank in Indonesia. We'll be Indonesia's next gold mine. And it's a pretty exciting place to be from a delivery perspective and from a value perspective. I'll touch on your point there over this conversation, Hedley. Essentially, I believe that we're double the value proposition that we were 12 months ago. So let's firstly talk about Nusantara. Then I'll take you through what we've got and what we're doing. So in terms of Nusantara, I think one of the first things that I would say is that Nusantara is a relatively new company, IPO'd on the ASX in 2018, but we've delivered ever since. We've delivered a feasibility, we've delivered on partnering, we've delivered on funding, and we've delivered on a team. So we're now moving ahead, and this might surprise people in this environment. We're moving ahead with a US $30 million early capital budget in 2020 to take this into development in 2021. In terms of the ingredients to deliver, if you look at the very simple proposition for junior companies, you've got to have an asset. We've got a very valuable asset, a big gold footprint. We've got an outstanding partner. As I mentioned, we've got the team. And even in these very difficult times, we've got the funding. So without talking to a slide deck, I'd just like to firstly start off and talk about the asset. What have we got? We've got ounces in the ground, and very valuable ounces in the ground. We did a feasibility in 2018, and the very basic metrics on that feasibility, over 10 years of mine life, 100,000 ounces a year, $750 an ounce ballpark all-in cost, and an IRR of 20%. They're very good numbers. That's enough to move ahead. But as you point out, we're $350 higher on the gold price. In terms of the gold system, we have a 2 million ounce resource, 1.1 million ounce reserve, and the slide that I would refer you to in terms of our presentations, a very large open cut pit proposition where there's a very large delta between that reserve and resource. And we're going through a year-end update to review additional information from drilling. We had a fabulous hole outside of that pit last year, 63 metres at 2 grams. So we've got information to bring into our year-end update, and we've also got a higher gold price to bring into reserve and resource. So just flagging, our reserve was done at $1,250 an ounce, resource done at $1,400 an ounce. So I'll just talk you through the next step in terms of what we're doing. I think most importantly in this environment, if you're a junior company or a developing company, everybody's wondering, where's the money? What are we going to do? Nusantara has already got a game plan. Nusantara delivered on its funding in 2019. We announced a joint venture arrangement with a very strong Indonesian partner with capability. Our Indonesian partner is putting $40 million of equity in this project. We're putting another 10 million co-invested in the project. We also have, as announced last week, an $11 million feed contract as part of a $40 million feed and EPC potential funding package from an engineering firm in Indonesia. So we've got feed, we've got EPC covered, we've got project equity, and we're engaged with banks, and we have an appointed advisor, and we're targeting 100 to 120 million of project funding. And that is all part of delivering on 160 million CapEx projects. So we believe we've got the game plan on the funding. On the CapEx, I mentioned earlier, we will be $30 million spent, all going well, into a $160 million project. So the bottom line is we're actually doing, not talking. At this very early stage with respect to COVID-19, it's basically a dynamic situation for everybody. But at least for the next quarter, we've got a lot of engineering activities going on that can be done remotely. Our resource work and reserve work's continuing. We've engaged engineering and other consultants, and a lot of this work will continue regardless over the next quarter or so, which I think will be the difficult period. In terms of the team, we do have an owners team. We've got a very good feed team, quality consultants. So the bottom line is we will continue to deliver in 2020. from the value proposition, Hedley, you mentioned earlier, what does the gold price mean to us? We will refresh our economics in this current quarter. We are $350 an ounce higher than where we did our reserve and economics in 2018, and absolutely that will flow through to that value proposition. We will refresh the market, but the ballpark is about a double on what was a $150 million NPV at a project level back then.
That's a pretty reasonable return for sitting on the ounces and watching the gold price go up. I know you've been working very hard, but you haven't been wasting any ounces at $1,250 an ounce. You're poised, I would think, to be able to produce those at a much higher price. And given that we've just been talking about the weight that might be behind the gold price pushing it up, it sounds to me like I'm talking my book here, Lion, of course, as a shareholder, a very compelling situation you're in. I guess the question which a lot of people ask if they get over the funding situation, that your partner has provided you with a situation where you've got funding behind you, which is very rare. You don't see that in the Australian market for Australian projects nearly as much as you might do in Indonesia. That puts you in a situation where really all you need to do is lay the project out on the ground. I don't suppose that there's much can get in your way from this point. So I guess it's really just a time frame issue for you, Greg.
Look, ultimately, we have a roadmap. We've delivered, as I said, since 2018 on what's a textbook outlay for a mining company or a junior company, is basically do the feasibility, do the work, find the money. In this case, partnering was very important to us. We have a strategic partner, and our strategic partner brings to us a number of opportunities in terms of leverage. They're financially connected, and they're a very switched on partner. So they're complementary to what we want to achieve in Indonesia. I think the final point that I'd make, Hedley, is look at the footprint of our deposit. We're a 2 million ounce resource. This thing can only grow over time. It's a massive mineralisation system.
That's often the case with gold deposits. You run out of economics at the end, but not metal to mine. So hopefully in getting started in this environment, you'll be able to make all of your capital back and more very, very quickly, I suspect. Look, there's going to be time to talk a little bit more, particularly about Indonesia, because I've seen there's a question come through on the pre-registration on the jurisdiction. But I think we can probably talk about jurisdictions as another general couple of questions on countries, which might come up when we get time at the end. I wouldn't mind moving jurisdiction now and shifting to South Korea. We've got Simon Mitchell on the line with us. He's dialing in from Adelaide, which I neglected to mention at the start. We've had all those exotics and forgot to mention Adelaide, but you might be used to that living in Adelaide, Simon. Sorry,
yeah,
that's put that little one in. This is rounding out the selection of gold companies that we've got on the panel here. But to my knowledge, there are no other gold explorers active in South Korea, or at least not on ASX. But every time I see one of your Southern Gold presentations, it strikes me that you've got pictures of old mines and new mineralisation and some pretty stunning grades in some of the rocks that you've picked up along the way. So the place, to me, looks like it might be loaded. And I just wonder whether people are mistaking South Korea as a manufacturing jurisdiction when in reality, perhaps they should be mining gold there. Maybe you can tell us a little bit about that.
Yeah, no, thanks for the intro, Hedley. Yes, well, that's right. Whenever I raise with people that we're operating in South Korea, there's genuinely, surprise. It's definitely not on anyone's radar screen. Yes, it's a brilliant manufacturing nation. They play to their strengths. I don't think they're going to stop that anytime soon. Everyone knows all the key brands there, the LGs, the Hyundais, the Samsungs of the world. So Korea has an incredible economy and has done, it's almost like an economic miracle, really, when you look at it from the early 1980s till today. So I don't think they're going to replace that with gold mining, but certainly there is huge potential here. And probably when you've seen all those photographs, it speaks to a period where they did do quite a lot of gold mining, which was during the Second World War and then through the 60s and 70s. But most operations shut in the 1970s. So a lot of what we're looking at hasn't really been assessed since that time. And so that's why we make the comment in our presentations that we are looking at a situation where there's been no real modern exploration for many decades. And so that's why the quality of the rocks is extremely high. but the social context there is such that it hasn't really been explored, which is a very, very unusual situation. Going to that a little bit, will they mine gold? They actually do mine gold at small scale there, like prospecting scale. Not that you would notice that on the international scheme, but I would like to think that there is potential in Korea to develop up almost a boutique mining industry or boutique gold mining industry, not unlike what you see in Japan, which is to say there's a small number of mines, but they are very high quality. And that's the sort of scenario that we can see unfolding in Korea because of the nature of the geology there and so forth. We don't have access to our slides, Hedley, but I was going to spring something on you with South Korea as a boutique beer. And the key ingredients of beer are malted barley, hops, yeast, and water. And I was going to go through and explain how Southern Gold has got all the key ingredients for making a gold discovery. So, it could be that we've got a boutique beer, or it might be that we've got a forgotten cellar full of Grange. And that's the thing, right? So probably what's got our geologists very excited is that we've got a jurisdiction which has got a lot of parallels with Japan and the Jiangdong Peninsula of China. So again, I would show you a map and you'd be able to see, eastern China and the southern part of the Japanese archipelago. And basically the point to make is that there are world-class deposits in both of those locations. And the macrogeological picture, they've got the rocks are of different age, but they've all experienced the same tectonic kind of interplay. And so what we think is that Korea has got this sort of almost forgotten bit of the world's geology that hasn't seen decent exploration for many decades, and we're going in there. In fact, we are basically the only real company operating in Korea. And to give you a bit of colour on that, in terms of why we think this is actually a quality area, just have a look at Japan. So there are two companies operating in Japan, funnily enough, Japan Gold and Irving Resources, and they've signed big deals, one with Barrick and one with Newmont. Have very, very significant funding packages, and they've certainly got their foot on the accelerator there. So you can sort of see the big boys are sniffing around in that area, and we like to think that we're well positioned and early movers in that part of the world. In terms of the ingredients of Southern Gold and why we think we've got a boutique beer at least, if not Grange, is we've got some fantastic geologists behind us, right? We've got some of the best geologists in the business in the group. A lot of the old Robert Friedland's Ivanhoe Group DNA that have come back to Korea. They used to work in Korea pre-Oyu Tolgor discovery. And so we've got a lot of the old team back together. So we've got fantastic geos who know how to look at these type of rocks and are familiar, if you will, with this situation. So fantastic people. We've got people like Doug Kerwin has just joined the board. Terry Grammer will be joining the board shortly. Metal Tiger have funded us. So we've just done a raising for $4 million. So we've got over $5 million in the bank. So we're well funded. We're actually actively drilling. The tenure in this situation, the situation in Korea is fantastic in terms of tenure and support from the government and just those whole sort of infrastructure issues and things like that. Fantastic jurisdiction. You put all that together and you've got something pretty special.
I got to say, when you started describing it as a microbrewery, you kind of had me at that. You didn't actually need to say anything else because, I mean, if you'd said that you made your own rum there, I probably would have written a check. That jurisdiction, I think, is a really interesting one in terms of the geology, but also in terms of the overlying culture. And we've heard a little bit from Greg and Craig about, COVID-19 and that has slowed a couple of things down, as Craig was saying, with the assays at Pani. But we've noticed South Korea was a little bit of a feature of COVID-19. Has that, I don't want to sort of put you on the spot as whether it's inhibited you at all, but you've got people over there, you are operating, you can speak to them every day, so it's not like you need to fly there just at this moment. Is there an experience you'd like to share with us just before we move on to the group questioning?
Yeah, look, I think what our experience in South Korea is very instructive about the country as a whole and how it does things. And one of the things, if you just cast your mind back to a few weeks ago, and South Korea was a bit of a pariah state. No one wanted to fly there, and there were flight bans and all the rest of it. but now it's held up as one of the countries which has actually done the right thing and has actually got a very good system in place, got things under control. So, for example, our operating teams can move about the country there unhindered. We're drilling in multiple positions, a couple of different projects at the moment, so we're able to operate there. Obviously, we've had some issues with our expatriates who had to return to home countries, but that's because of travel bans done by Australia and New Zealand and other places. So that's actually nothing to do with Korea, really. So, a few things that people may not be aware of is that Korea, one of their biotech executives developed up the testing kits in mid-January. And so they're actually manufacturing testing kits very, very early. They have an app there that tracks people with COVID, and they've got a very visible system so people can see exactly what's going on. So I think that puts a lot of confidence with people about the government being in control.
That's some pretty interesting observations there. Look, what I might do is, I had a couple more questions on South Korea, but we've got quite a long list of questions which came through pre-registration and other things. I think we have got past some of the technical issues that we were having from people at the start. Mike, you've got your hand up.
Hedley, I just wanted to acknowledge what an excellent audience we've got and some of the people. This is not calling them out to make a comment or a question, but I looked through and just wrote some notes from Zhaojin. We've got Leo Zhao and Daniel Rickelman, who both look at projects overseas for Zhaojin, the Big China SOE. Robbie Joseph from Bell Potter, Richard Shoddy, Melissa Holsworth, Richard Morrow. We'd love to hear from you as well. You will be hosting, I think, next week. So, guys, feel free to ask the questions in the last 10 minutes or so. We'd love you. Just go into the participants, put your finger up, and we'd love to hear a question from you. Back to you, Hedley.
We can selectively unmute people, so we can probably filter from here. I think we've probably passed most of the risk for some of the people who are on before. And while people are thinking about their questions, if they have any, Lucy, would we be able to cue the second poll, please? Given that we talked before about the quality of the market and where we are, Mark Goulopoulos gave us a fair few thoughts there. I thought it'd be useful just to cast around the audience. We're in the most unusual and unpredictable market we've ever been in. And I don't just mean in our lifetime, this is probably ever. So there's a question there for everybody. How far are we from the bottom? My father takes great joy in telling me that people who pick bottoms get dirty fingers. So I'm not asking you to put too much risk on the line there, but give us an idea of what your thoughts are as to how far we are away from the bottom, or whether we have actually passed it in your view. So we'll let that run for a few minutes whilst we look for questions coming through. I have a couple which I know came through from the pre-questioning. And Mike, you called out some of the names there. Look, if there's anyone here who would like to ask a question, please do stick up your hand. But I might lead off with something here. One of the questions which came through in the pre-questioning was, what do we think that financing is going to look like? I think probably more for the mining industry than for the broader market. But what do you think financing is going to look like in a post-COVID-19 market? I don't know if Mark Goulopoulos or Craig Smyth or maybe even Robbie Joseph or Richard Morrow or the others.
Robbie Joseph, we've just unmuted you, so go ahead.
Robbie, do you want to speak to that one?
Can you hear me, guys?
I can hear you, mate. Go for it.
That's great. Forgive me because I am a Zoom version. This is the first time I've done this. So my question is, going back to investments in gold in Indonesia. Can you tell me a bit more about J Resources, who own the other 40% with Medeka?
Craig, you're one of the world-renowned experts on J Resources. I wonder if you can give us something which is forensic and archaeological.
Look, J Resources. Obviously, I do follow their progress pretty closely. So they're the holder of the other tenement and will be our joint venture partner going forward. They seem to be in a little bit of world of hurt in terms of mines that are coming towards the end of their lives and quite a high level of debt that we don't really see a way that can be repaid. They are very keen to stay involved with Pani, so it has been quite a laborious process in terms of getting them across the line and doing the joint venture with them. And in fact, there still needs to be an approval from their bondholders to release security that they have over the tenement, which really is the key condition to bringing the two tenements together. So they're an interesting bunch, but we'll just have to wait and see. It's a bit hard to give you too much else about them because it's not really a company we follow that closely. We just look at their financials.
Might be possible to say that they recognise the value of tipping their part of the Parney project in with the other part of the Parney project because it unlocks value for everybody there. So the condition they're in, they've recognised that, and we'll look forward to working with them as we go forwards there, I guess.
Thanks.
I can't see any other hands up. I wouldn't mind. Go on, mate.
I just had a question for Greg, actually, re Nusantara.
I think you should go for it. We're probably at the point where we can say we're on the last question, or at least the second last question. So, Mark, you ask Greg whilst we assess if there's one last one from the audience.
Okay, no worries. Greg, you just coming back to the feasibility study versus current gold prices. What are you able to give an estimate of what the NPV might be on a per share basis for your share of the project at the moment, given how well gold has travelled since you completed the study?
Mark, to be very direct about that, I'm constrained by ASX guidance, and the way ASX works is that we publish a feasibility. We provided a 10% sensitivity to gold price, which was $13.75 US an ounce. We're a long way out of the money on that, or sorry, in the money on where the gold price is. The way we intend to address this is that we will present our year-end resources and reserves this quarter, and we'll provide an update on our economics and our sensitivities and provide a much broader range of gold price sensitivities. If you do the very simple maths, Mark, is that if we're going to produce 100,000 ounces of gold per year and it's moved $350 an ounce, that is $35 million a year of revenue, or say 50 million Aussie dollars a year of revenue. And that's a very significant number divided by number of shares of Nusantara on issue for what would be an attributable share. So, look, the simple back of the envelope is we should be heading at around spot price for a double on what our NPV was, all things being equal.
I was going to add a summary to that and just say it looks like we're a long way south of where we should be, and we just need to head north for a fair way, just in terms of a rough NPV per share. But I could have my blinkers on there too.
Thanks, guys.
I think we've got time for one more question before we sum up and move on to next week. Robbie Joseph's got his hand up and he's unmuted. So, Robbie, go for it.
Okay, this one's for Simon regarding Korea, or South Korea. How is the South Korean government treating or quote unquote assisting Southern Gold with their exploration effort? Because I do remember a while back that Kores, which is like a government department, basically had some funding available for companies that look to undertake exploration, but understand that there was a fair bit of paperwork and a bit of red tape to work through. Again, that was quite a few years ago. So I was wondering if you can give us an update, Simon, to see how the government is treating explorers in this age.
Pretty well. They do actually still have that program in place. So Kores used to have an offshore focus to a lot of their activity, but recently they've changed that so that they are looking at more domestic assets, particularly with gold. They used to also be constrained by a strategic minerals constraint, but that's no longer in place. It's a situation where you can have up to 70% of your direct drilling costs rebated for a program that's been designed with them. So obviously that's not for everybody. It's not for all our drilling, but if we have certain drilling that's perhaps say high risk or early stage, almost a virgin project type drilling, we can do that with Kores and get up to 70% of the direct drilling costs rebated. which is pretty impressive. The government also has a number of other programs in place that actually assist with mine developments and things like that as well, which we don't have time to go into today, but rebates on capital equipment and things like that. So it is actually a very good jurisdiction in terms of government support.
Good answer, Simon. It sounds like the government really wants to see you there, which is some jurisdictions you go to and you find something and locals want to pinch it. Then you get to the point of trying to build it and the government wants to get in the way. And sometimes, it's very welcoming, the message that you get from the government while you're there. And I just wonder whether South Korea is one of those jurisdictions. They've had such a long period of not a lot of mining. I think they're probably quite open-minded to it. So Robbie's obviously giving you the great big thumbs up when he's putting on his headband. And I can see a couple of other team affiliations being declared here.
Sorry, Hedley.
Mark's showing us a letter he got from Eddie Maguire, I think. Look, we're going to pull up stumps here, guys. We've actually gone a little bit over, and I'm going to blame the interruptions that we had at the start for that. I can tell you what the polling results were officially, and if self-fulfillment has anything to do with what will happen in the market. In answer to the question, more or less, how far are we from the bottom? 6% of you thought we've seen it. Stimulus has headed off more significant falls. 29% of you said we'll retest previous lows, but no more than 5% further. 53% of you, and I think the majority has it, somewhere between GFC and Great Depression performance still expected. And 12% of you said we're in gold, so the relevant question is how far off the top are we and not the bottom. And I'm actually with you on the bottom two answers there. I think it's probably both of those. So in moving to, I'll share those results actually. I'll just click that. So look, in moving to wind this up, I think we need to thank every single participant for your patience in listening through this. And the final thought I'd leave you with, sorry all you AFL supporters, but my tip for the flag this year is the North Queensland Cowboys. They're going all the way. They went into 2015. It's going to happen again. And if there was a season, you would know. It's going to happen in private, sadly. So thank you all. I think we'll call it a night at that. Well done.
Thank you. Thanks, everyone.
Thanks, bye. Bye.
Thanks, everyone.